Welcome to Markets Now. I'm Rochelle Rook along with Darin Newsom, a senior market analyst with Barchart. And we're kind of mixed over in the grains this morning, quiet heading into the reports. The livestock futures also mixed with cattle mostly higher, hogs are mostly lower. And Darin, a lot of hype always going into the quarterly stocks and especially this prospective plantings report. But you have a different take on this, which I'd like you to share about what the market's already telling us about those numbers.
Yeah, what's interesting, if we start with the stocks numbers as of March 1, I think that gets lost quite a bit. These are not new stocks numbers. These are as of March 1. So we can go back and look at not only future spreads, but we can look at, cash markets, we can look at basis, we can look at all of this, and it tells us what we need to know about what the stocks were at that time here in the US. And according to if we just look at the cash market and available stocks to use, we know that we had loosened up a little bit over the last month and from the past year. So off farm stocks for all three grains, corn, soybeans, wheat, should be larger than what we saw last year. Do we know the actual number? Not at all. Do we need to know the actual number? No, not at all. Again, we can tell with the strength in basis, particularly corn, that demand was outdistancing the supplies that we had. So we had merchandisers continuing to push. We had inverted future spreads. So there was a lot going on at the end of February.
So the acreage as well, you think the corn soybean ratio already kind of told us what that should be?
Yeah, I'm not yes. A short answer is yes. We saw December corn do what it needed to do from September 1st through February 28th. That's when the decisions were being made. As far as most U.S. producers. So, and we saw December corn stay strong against November soybeans for that entire 6 months. So, if nothing else, we can see that we should be planting more corn acres. The corn likely bought some acres away. The closest fit to what we saw this year was back in 2016 when corn acres increased by something like 7%, almost 7%. So, I don't believe in analogous years, but that's really the closest fit that we have to what we saw. And then if we want to just look at what, government spring crop insurance price, it also favored corn all through February. So, the fact that we're going to probably see more corn acres again, the USDA's annual outlook seemed to back that up. We have no idea how it'll come out, how the guess will come out today, but that's what we saw back in February. Just all things seem to be leaning towards, we're going to see more corn acres, and soybeans are a bit of an unknown.
Yeah. A lot of guys I talked to, though, said more corn, and 591 crop insurance price for corn certainly would dictate that as well, to your point. All right, so it is end of the month. It's end of the quarter. I know you're watching, and it's always an explosive day here with these reports, regardless of whether you buy into the numbers or not. But you kind of are looking at some chart points, especially on December corn, in terms of where we could break out one way or the other today. What are you watching?
The key to December corn as we come to the end of the month is 569.75. That is the February close. That's the February settlement. So, the long-term target, we've been in a long-term downtrend since last May for December corn, and the long-term target was about 543. Well, earlier this month, we got to 547.5. That's pretty close. It's within a nickel. And then we all of a sudden started to rally, and now the contract finds itself, on right at that 569, 570 level as we head into Friday session. So, it's going to be interesting if we get a close above that mark from a technical point of view. The argument could be made we've completed a bullish spike reversal. If it doesn't, if it falls down, it opens the door to a possible test of that target of 543 over the coming months, but probably not much lower than that. So I do think today is going to be important. I think it's going to be fun to watch, for nothing else, just to see where D's corn finishes.
And November soybeans, we had 13 down days. We had this big downtrend on that chart, and we've tried to heal that a little bit. But what are you watching there here today, end of month and end of quarter?
As for November soybeans, I think it's just going to be basically the flip side of what we see in corn. I'm not looking for a big reversal to happen in beans, but it certainly could happen. From a technical point of view, beans longer term are actually more bullish than the corn market if we look at deferred spreads. And so, the market's telling us that they're just not confident that we're going to have the acres that we need to meet demand for the 2023-24 marketing year. So, longer term, get away from today's knee-jerk reaction. I think that's what we're still going to be dealing with.
Gotcha. Since it's end of the month and end of the quarter, and we've had a big week in the equity indices, Dow, S&P, NASDAQ, you name it, crude oil's been up big here for the week. Is this just end of the month, end of the quarter short covering, or are we seeing maybe something that we're going to be building on here?
I think a little bit of both. I think we have seen some short covering or some buying back in on some of the long sides of some of these markets. So I certainly think some of that has been going on. We look over at crude oil. There's an outside chance that crude oil posts a reversal this month as well. It'll be interesting to see if it can finish that off. The U.S. dollar index is in a long-term downtrend. The U.S. stock indexes that you mentioned are in long-term uptrends. They may not just turn around and just go crazy today, or they may not go crazy Monday. But that's the long-term patterns that we're seeing. So I do think we're going to see some money start coming back into these markets. It's just going to be pick and choose, I think, over the next quarter as well, as far as which markets want to see the most investment money.
One of the markets that has had a big breakout yesterday, both the live and feeder cattle futures scored more new contract highs here. And I know you call this the live cattle stampede, but it was pushed obviously by tight supplies, but also by sharply higher cash trade this week. So we're a little higher this morning. Where do you project us to? How much of a bull market is this?
What's interesting is I don't see it as a tight supply situation. Future spreads certainly aren't telling us this. Boxed beef has been coming down, but that doesn't stop the fact that we saw cash in the South trade 167, and I had a gentleman report to me cash in the North hit 170. Where it goes. Once a market starts to hit new contract highs, it's hard to put a top on this thing right now. We've got unchecked buying. We've been seeing some selling. We've been seeing some non-commercial liquidation happening in this market. That went away about midweek this week. And all of a sudden, we're seeing this unchecked buying coming back in. Do I think it's tight supplies? No. Does it stop the market from going higher? Absolutely not at this point.
All right. I even had some 172 cash trade up in the North, Darin. So it was a unbelievable week for sure. So a lot of the bulls think they got the bull by the horn right now. So we'll see if that continues. And just lastly, hogs have been in a downward spiral. We had the hogs and pigs report out yesterday. Not only did it show just a little bit of expansion year over year, but we did some major revisions in the last December's pig crop, USDA raising that. So that's really kind of showing us what we already know, and that is that the supply is bigger than we thought, isn't it?
Yeah, we saw that in February. The way the April-June spread was acting, June-August. We knew, that it just looked like our supply and demand was getting a bit out of balance, and we still had some decent demand. The problem was the supply, as it turns out, it was a supply issue. And that's certainly weighed on the market. And it certainly led to a great deal of non-commercial selling. In fact, so much so that group actually went to a net short futures position. So we knew there was something bubbling around out there. And whether or not we believe USDA numbers, that's what it certainly looks like it turned out to be.
Yeah, a lot of people were doubting the hogs and pigs report, especially when you compared it to slaughter numbers. And yesterday really bore that out for sure. And so do you think the bottom is in? Are we getting closer? Or we got a lot of more downside risk just because of what we just talked about in that hog market?
I think it's going to take a lot of adult beverage to ever decide where a top or bottom might be in the hog market. It is just absolutely wild. I think it could. We could possibly play this as a possible bottom. I'm just not going to be the first one to do it.
No, I think you're right. That is a drinking game, probably. All right. Thanks for joining us. Darin Newsom, Senior Market Analyst with Barchart. And that's Markets Now.